If the market were to do this, here's my question for you. If the market were to go up here, could you still look for a trend continuation play? This is a tricky one. And this is going to be one where I always categorize this strategy as saying it is one where the rules don't actually make sense, but they kind of make sense. This is technically a violation of our trend, right? Because if we are looking at this as our new structure low, our outside return, our new structure low, we know that if the outside return is violated, then boom, the trend is violated, right? Would you guys agree? Per our rules, if outside return violated, then trend is violated. It is in rotation. Would everyone agree with that? So this is where the dilemma comes in, because you have a violation of trend. Therefore, if you have a violation of your bearish trend, you should no longer be looking to get bearish. But on your higher time frame, going back to the hourly, does a move right here violate the trend at all? No, right? And this was the interesting thing with day trading, because you see so many of those kind of micro trends, right? The trends within the trends within the trends, that you're going to get those ebbs and flows, which are good for day trading, but you're also going to get these things where sometimes they are violated on that lower time frame, but not violated on your higher time frame. So this is where the Fibonacci inversion tactic came in. And here's what you would do, right? And I haven't looked at this yet, so we'll see if it actually lines up. But here's what you would do, right? So let's pretend price has gone up here and violated this trend, right? And what the market is doing is it's tricking you, right? They're tricking you into thinking that the trend has been violated when it really hasn't been violated, right? And there's the whole institutional thing that I shared with you guys in the Trading Coach podcast about that a couple weeks ago, or was it earlier this week? I don't know. At some point I shared it with you, so we're not going to dig into that again. I trust you listened to that episode. But here's what I like to play this, right? I used to do this. I used to take my Fibonacci extension tool, invert it from my low to that outside return, and back down. And the key trigger for me, right, was the 618, or 1618, excuse me. I then took my Fibonacci retracement from the previous swing high of the quote unquote, the real downward move, right, to here. Oh, this is going to work perfect. And boom, the overlap. And I looked for the 618 Fibonacci retracement to overlap with the 1618 Fibonacci inversion to be right at a level of structure.